Permar, what we can expect from the Fed, let's bring in CNBC's senior economics reporter, Steve Leisman. Steve, we called at the top of the show one of the most important Fed meetings, and we say that a lot about Fed meetings. We don't really mean it about all of them, but this one seems particularly important. This one in particular, because of what the Fed can and may say about the pace of taper and what this means for the markets.
Yeah, and I think it's more than that, Melissa. First of all, when I say it's the most important meeting, I mean it all the time. I don't,
Every single time.
I don't make it up. It's just one of those things. I just, whatever I'm working on is the most important thing ever. So I think it's not just the pace of taper. I really think the $30 billion taper is fairly well baked into the market, Melissa. I think the more interesting wild card question is the pace of rate hikes that the Fed itself dials in to its economic projections that come out on Wednesday as well. How many hikes does it see in 2022? How many hikes in 2023? And how far is it going in terms of hitting its neutral rate? And I think there's even a more important question, which is, given what's happening with inflation, will the Fed have to sort of pull a Volcker and raise rates above that neutral rate in order to slow the economy and combat inflation? That's a longer way down the road, but we asked that question. There's the hike probabilities right now. You can see what's more or less built in. Pretty much by May or June, you get your first hike. Pretty much by September, you get your second hike, and then the market's kind of arguing over whether or not it can slip in that third hike next December 2022. But we asked this question, Melissa, of our Fed respondents to our Fed survey, and we said, hey, will the Fed have to raise rates above the neutral rate and slow the economy? And there's a debate about that. 45% say yes, 48% say no. So that's something that's down the road in terms of, will the Fed have to slow the economy?
So what is consensus now on the street, as far as you know it, Steve, in terms of the expectation for rate cuts? I saw Bank of America, I think, is 8 by the end of 2024. Barclays is 9 by the end of 2024. So right. I'm just wondering how much faster the anticipation is at this point on Wall Street.
Well, I can tell you real quickly. December was, back in September, December was the first rate hike. Now it's June. So that's 6 months earlier to begin with. We have in our survey 3 built in next year, 3 built in the year after that. So we get to 150 by 2023. Ultimately, we get to 2.5, 2.3 by 2024. So there's a long way to go. But I just want to throw out one idea here, which is that even while the Fed is raising rates and stopping QE, it's still going to have a $9 trillion balance sheet. The idea is the Fed is not, there's no consensus now the Fed will let its balance sheet run off. So that'll be a plus or some kind of support for equities in the months and years ahead if it doesn't reduce that balance sheet. There is some thinking that the stock of what the Fed holds has a powerful effect on markets and rates, in addition to the flow into it, which is going to stop when they end QE in March.
I get that in theory, but I mean, Tim, I'll go to you on this.
Right.
It's really, the markets care about the hikes at this point. They don't want to intellectually know that the balance sheet is still supportive of equities. I mean, they want to know that, but that's not going to change the direction of the trade if the Fed is going to say they're going to hike faster.
No, I think that's right. And again, I think the market is not prepared for a Fed that's going to hike faster. I think Steve may be right on where they've managed expectations on the taper. I mean, the question is ultimately, though, I think at some point investors could start to really question whether the Fed has been accurate all along. And so we've all we've gently applauded the Fed here, but how could they have gone from being, so unaware or so indifferent or ambivalent about inflation to where they sit today with, record inflation, or at least 42-year inflation? That doesn't add up. This didn't just happen. We've been talking about this for a long time. So at some point, I think the market gets concerned. And if you think about where we were in December of 2018, and I don't want to be alarmist, but the market lost all sense that the Fed was really acting in a world where the skies were blue. And in that sense, in some sense, it was the Fed that was moving too quickly again. So at some point, the Fed being behind the curve means they will have to move too quickly again soon. And that's what I'm worried about. And I think a market that's this far ahead, and Dan pointed out the damage below the surface, I'm worried about, we haven't even seen that. And we've all talked about this. This isn't my idea. Apple's at all-time highs. The S&P's just off of all-time highs. So I think credibility with the Fed, maybe that's the wrong word, but the Federal Reserve, how could there be such a mismatch, maybe the greatest mismatch between where central bank policy is right now and the strength of the economy? I think the market's going to be worried about that.
Hey,
Steve, it's Karen. Let me just jump on that credibility question for a second. Oh, go ahead. Go ahead. I'm sorry.
No. I'm interested in your question. I'll get a comment. I'll make it later.
Okay. So the credibility question. Now that they've made this very, Powell has been very forthright in what they intend to do, and Mester and others have backed this up, what, if anything, could throw them off this path? Or do they just have so much, their credibility completely at stake? It doesn't matter what the jobs number is, doesn't matter what the virus does, they got to go forward.
Look, it all depends upon what kind of Fed you want. Do you want a Fed that knows everything is going to happen and sticks to its guns no matter what, or one that changes on a dime? I think you could write the same story about Powell and come to two different conclusions. One is that he missed it, he messed up. The other is that he's the guy who's shown that when the facts change, he changes his mind. I was just going to point out to Tim that we started the year at 1.68 as of February. We're 1.7% inflation. So this recent rise, Tim, is relatively new. And it happened while the Fed was still trying to figure out that whether or not Biden was going to pass this new fiscal stimulus thing. So, yeah, the Fed is late, but not crazy late. And in answer to Karen's question, what could change the dynamic here? Look, if all of this talk about the Fed has an effect on inflation, has an effect of the market helping to break the inflation, and the open mouth operation works, then you could get into a situation back, in June where inflation is beginning to come down, which, by the way, is the forecast of a lot of people. Then the Fed won't have to do as much because it's going to do more a little earlier.
All right. Steve, thank you. Steve Leisman on
Sure.
the Fed for us. I think the horse is out of the barn, so to speak. I mean, when it comes to the market believing Powell and inflation and his forecast, I mean, I think this is just... I'm coming back, and I'm going to say an opinion. I think the markets already think that Powell got that wrong, that the use of the word transitory was wrong, and the fact that he dialed it back the last time he spoke was the right thing, and showed that maybe he misforecasted how long and how sticky this would be.
It's fascinating. To Karen's point, though, did they retire transitory? Did they ring the bell in terms of retiring transitory? We're going to start to see the numbers go the other way. I think that speaks to Karen's credibility question, without question. The other thing is worth mentioning, because why not, but something that we call TIPS, the Treasury inflation protected securities. It's easy for me to say. I mean, 30-year yields have never been lower. We're talking about real interest rates as negative probably as they've ever been, which we probably should talk about more. And it just goes to Tim's point about them being so far behind the curve. Again, just my opinion.